Hey, welcome everybody to our Finance Friday weekly wealth creation course. I'm Jerry Fetta here with my co-host, the one and only Nano Aquino. What's up, Nano?
Hey Jerry, what's going on?
So we've got a good lesson tonight, a good course tonight. The topic is going to be life insurance and wealth. Okay, and this is a topic that I'm expert at. I can say that I've been doing life insurance since I was 18. I'm now 30, so I know a little bit on the subject. Nano, you've been doing this for almost 5 years now, 4 years.
That's correct. Yeah. Yeah. One first year as a client, then 4 years full time as a working with you.
How many, if you had to guess, how many people do you think you've helped set up a properly structured life insurance policy since you started here?
Man, firsthand, I was just looking at some of the contracts that I've sent in the past 4 years. So it's a little over 1,400. So not everything is, was life insurance. So probably about half, anywhere from 500, 700,
So you've
yeah.
helped insure 500 to 700 families in the last 4 years.
Correct. Yeah.
Incredible.
About 500 people.
So Nano is a wealth of knowledge. I am too on this topic. We've also got Griffin Henderson. Griffin is our head of public contact. He works with clients. He works with ambassadors. He works with new people who aren't in-house with us yet. And so he's basically going to be here as well. Griffin's in the life insurance industry too. He's been in for several years. Let me make Griffin a panelist, actually. Griffin, as Nano said, will be reaching out to you in the chat. So if you're not a client, check your chat. Griffin's going to be sending you a message. The purpose of that message is to connect with you and to take your questions and maybe your thoughts or things you'd like help with onto a free consultation, right? So Griffin is going to be able to help answer questions, kind of get you the information you need off the webinar. One of the things that we're going to cover tonight is the book that I wrote 2 or 3 years ago now, almost 3 years now, called Blueprints of Financial Freedom. So I wrote and published this in 2020. And so we'll cover some information on this book on life insurance, right? And so if you don't have a copy of this already, one of our goals is to get you set up with one. So if you'd like to get that, reach out to Griffin. Griffin can post the link in the chat as well. And you're able to get the book. And then you also get, a course with that. There's a supervisor that we have named Sam, full-time on staff. All she does is help our clients read the books, get through the material, do the training, and actually win with it and apply what they're learning. So if you don't have the book yet, definitely get that set up. But Nano, do you want to cover our ground rules before we get started?
Of course. Yeah. So as far as a couple of things here, right? As number one, have a purpose for attending the meeting here. It is Friday night, right? We've been doing this for a few years. So ask yourself the question, what am I doing here? What am I trying to accomplish? Again, there's going to be a different group of individuals are going to be joining the group here. Some of you may be fairly new to us, right? You may have just not even done anything. Some of you may have perhaps just bought a book. Perhaps you're trying to gain some ground in understanding who we are, what we are about, and how we can help you, right? Beyond just getting the book. And then there's going to be clients, right? People who are actually joining here on a weekly basis because they get it, right? Like those are the kind of people that like we've been looking for, people that are really looking to improve their conditions, and improve their financial knowledge, so they can actually improve overall, right? Because we do need money in order to survive. So have a purpose for attending the webinar here. So that's going to be the main thing, because that is going to determine how I'm actually going to be listening throughout the webinar and what I'm trying to get out. Now, as we piggyback with this initial concept of having a purpose, now every week we go over this. Now it may sound redundant, but it's almost like as a refresher, I need to be very intentional and focus-minded oriented to actually get the information applied. I cannot just get the information for the sake of getting information. I need to get information with the intention of applying it, right? The goal here it is so your life can improve overall, which means I need to do something. It needs to be put into application. So look for ways to apply the information, which we're definitely going to be inviting you to actually do one of those actions. And one of those actions will be what? To perhaps get a book, get some knowledge, right? Now, the knowledge needs to lead to action, right? This is not we're going to be covering throughout the webinar here. Yes, we do need to understand, what we're doing, but we don't need to become a full-blown self-expert on this whole subject if I'm going to be to the point to design a life insurance account, right? I can actually just get in a car, know how to turn on a car and drive and get from point A to point B I don't need to know the mechanics and engineer of the car in order to drive one. Okay. So the third thing is go ahead and ask questions if you do have them, and we're going to be answering them throughout the webinar here. Fourth thing, it is be a producer, not a consumer. Meaning, if this is for you, fantastic. If it's not for you, move right along. Right? We're not going to be engaging with any kind of negativity. And here's something to keep it in mind. Whenever we find a person mocking a subject, it is a very good indicator they don't have any full understanding of how the thing works, right? It could also be related to a person having some kind of a failure related to the subject, which means if I have a failure, there's something that I was trying to accomplish at one point and I failed. Therefore, I got to make that thing wrong in order for me to be right. Okay. So if that is the case, just have that awareness for you. And for momentarily, if you're looking to improve, if it is a thing for you, just put that to the side and come with an intention of learning, and let us help you, right? And last thing here, it is share if this helps you. And perhaps you are already on the path, fantastic, right? But what about everybody else around you? One of the things that we have been pushing here and throughout the company, for the past month and a half, right, is expansion. And this is one of the things that I had to confirm for myself, because I had to push the reasonableness aside in order for me to expand. It has to be very much intentional. So you being as the client, the person taking it on this information, going back to the purpose, what am I trying to accomplish, right? So I need to have my reason very much in the forefront of my mind in order for me to put some of my old beliefs and ideas aside in order to accomplish perhaps something that I had not accomplished before, which is going to require for me to do something that perhaps I have not done before, right? So there are going to be some of the ground rules here as we do get started.
Awesome. So guys, and like Neno said, we want to make sure that this is interactive. So if you're watching, we have the chat feature here on Zoom. So if you have questions, drop those in the chat. If you've got the capability to use your microphone, we'll actually mic up with you. We want to communicate with you, chat. I love talking with people live on these courses. So we will mic up and talk. If you're on Facebook, if you have questions, drop those in the chat as well. And then once again, Griffin, he's one of our top guys. He's going to be sending you messages in the chat. So be sure to check your chat. Don't be that weird person that sees Griffin's message and pretends like you didn't because you can't confront the fact that Griffin sent you a message. So make sure you check your chat, answer him back. He's a nice guy. He's here to help. We promise he won't bite. At least he didn't last week. We can't always guarantee things, but for the most part, he's pretty good at that. Okay. So without further ado, I want to go ahead and just share my screen, and we're going to talk through our presentation tonight on life insurance. Jeff says Griffin bit him. So we have one confirmed bite, but I think we told Griffin to bite Jeff. So he's kind of doing his job on that one. Okay. So life insurance, wealth and life insurance, the uncommon truth. Now I wanted to title it this because life insurance is such a tired, worn out subject, right? When you get to thinking about life insurance, like for me, when I got in the life insurance industry, right, I had no intention of being in the life insurance industry. No little kid grows up and is like, I want to sell life insurance when I'm older, right? Yeah, and you even see movies like Groundhog's Day. Who's seen Groundhog's Day with Bill Murray? There's that guy Ned that's always trying to sell him life insurance, and he's just like this sleazy, weird sales guy. So that's kind of what the life insurance industry is like. There's every type of policy, every type of flavor, every type of design, reason, pitch, guilt trip type of agent company out there. And they're all kind of saying the same thing. And so my intention tonight is to give you a message on life insurance that you may have not heard before. Okay, if you're a client, you've definitely heard this. If you're not a client, this is going to be a spin. It's going to be a different way to think about it. Okay, so the first thing we're going to cover here is what life insurance even is. Nano, do you want to read this one off?
Of course, right? It's going back to this right here, right? So life insurance, it is going to be a contractual obligation between an insurer and an insured, where the insurer pays a premium in order to create an instant estate and transfer the financial risk of death to the insurer. Now, life insurance secures the win even if I don't finish the game. So if we were to break it down, just a couple of the portions here, and I don't know if you wanted to say something before I address, kind of do a breakdown here, Jared?
Go for it.
Good, right? So when we take a look at this, so now first and foremost, when we think about what we're trying to accomplish, goes back to this, right? Financial freedom. That is the name of the game. So this is, I got to have this in mind. One, this is going to be the goal that we have as a company towards you as the client. Okay. Now, when we think about this, okay, I am going to be taking an action of steps in order to accomplish this. Now, this may sound like a very good idea, like almost like, I don't want to say a fairy tale because it can be accomplished, but it can be a fairy tale. And the concept is, how in the world do I accomplish this, right? Because like you may hear a person actually accomplishing such a thing, but how does a regular average individual go from point A to becoming financially free? So one of the things that we're actually going to be looking for, it is minimizing risks along the process. Until I am financially free, I am my most valuable asset, which means my level of, when we also think about the triangle of wealth, we need to have three components in place in order to build wealth. We need to earn, we need to save, and we need to invest. Meaning myself, I'm going to be doing the earning, right? So whenever I think about this, now I have an insurance company that has an obligation to me in order for that, it's in case I do die, right? I gotta have what is my purpose? I'm trying to accomplish financial freedom. If I do die before I accomplish the goal, now they have an obligation, contractual obligation, to pay my beneficiary, whoever I elected along the process, in order to receive the death benefit, right? Now, so there is a risk with the insurance company. I am removing the risk aside and making sure that it's taken care of by the simple fact that I'm getting life insurance, which means that even if I don't finish I cross the finish line, whoever is behind will be taken care of. Now, I can kind of go more like, I'm getting excited here, right, Jerry? But I don't know if you want to like break it down and think, I know there's more, like it's going to be a vast subject.
Yeah, I mean, there's a lot we're going to cover tonight, but like Neno said, it really is, the contractual obligation. So like just like from a standpoint of what actually happens, you have a monthly contribution or an annual contribution called a premium, right? Just like you have car insurance, you pay a premium, you pay that to an insurance company, and that insurance company, they basically are a financial giant. So if somebody passes away, they're going to pay out a death benefit to whoever their beneficiary was, their wife, their kids, the husband, whoever it might be. Maybe it's a trust. It could even be a company, right? I had a client literally 10 minutes ago text me, Nano, hey, can we set up life insurance for a company instead of an individual? Totally, you can, right? We have to look at what is financial risk, right? Like when someone dies, what are the risks there? If it's a family, let's say that I earn the primary income. Well, like Nano just said, the triangle of wealth doesn't stop just because mom died or dad died. That's an economic necessity. It has to keep happening. And so the risk there is, okay, well, the earnings have now gone. The savings are going to start to deplete. There may not even be investments. If there are, those might start to deplete as well. And so if I'm looking at, if I'm married, if I have kids, if I have employees in a business, the financial risk is I go away and then these numbers don't happen. And then financial freedom isn't possible, right? So like when I was a kid, I used to play board games all the time. And I would cheat. Like I would have like the end game in mind of like how I was going to cheat to win the game. And this is kind of like that, where it's like, my goal is financial independence. Okay. Passive income greater than savings, expenses, and taxes. If I don't get there, I'm going to cheat. I'm going to make sure it happens no matter what. I'm going to secure the odds so that no matter what, I win the game. Right. And it's funny because a lot of people don't view it like this. When you look at life insurance, and I'm going to go ahead and hit this part early, right? There's two different scales you look at, right? So we have at the top here, at the bottom here, at the bottom, we have fear. Okay, at the top, we have responsibility, right? And so when somebody's talking about life insurance, when I got in the industry, it was always fear. It was that slimy, nasty, like, oh, what happens if you die prematurely? Well, first of all, what does premature death even mean? Like that would basically mean that you knew when you were going to die and it happened sooner than you thought. Like there's no such thing as premature death. There's just death, right? But this thing of like, well, what about your kids? What about your family? We're not securing the win because we're afraid we're going to lose, right? That's fear. Fear is I'm afraid I'm not going to be financially independent. I'm afraid I'm not going to pay off my debt. I'm afraid that I'm never going to take care of my student loans. I'm afraid that I'm never going to have savings. Therefore, I get life insurance because I'm operating out of fear. Okay, I don't work with people that operate out of fear. Like that's not our clientele. That's not who we work with. We operate with responsibility. I'm going to do it anyways. Like I'm going to win the game. That's my full intention. I don't have a doubt about it. And I'm taking such a high position of responsibility that I'm securing the win, even though I think I'm already going to. And I'm going to get rid of anything that could be cause over me, right? If I'm trying to build financial independence, it's not just for me, right? Nano's trying to build it. It's not just for him. For him, a big part of it's his family. He's not like, hey, he wants to go ride around in a Rolls Royce and be in rap videos for the rest of his life showing off his dollar bills. No, he wants to take care of his family, right? I do too. And so that's a high level of responsibility. And that's why someone would say, even if I'm not around, I'm going to take responsibility for things happening. I'm going to make sure that my family's taken care of. I'm going to make sure that there's still income. I'm going to make sure there's still reserves. I'm going to make sure there's still savings. Good. So the next thing I want to hit here is, what is the purpose of it? Right? So the chief purpose of life insurance, and this is senior to anything you guys have seen, whether it's on TikTok, YouTube, it doesn't matter. The chief purpose of life insurance is to pay out a death benefit, right? There's so many different, like, wealth hacks and strategies and things you're going to hear online. Okay, those are all great, but it doesn't, negate the fact that the main reason someone gets life insurance and the main reason life insurance exists is to pay out a death benefit to the designated beneficiary upon the death of the insured. That's the main purpose behind it. Now, there's a couple other purposes, right? Like Nano, we use this for like cash accumulation. There's different riders you can put on, but the main thing is it's still life insurance. Okay, so I want to make sure that that's front of mind, because it's easy to like cover this up and sweep under the fact, the rug, the fact that this is life insurance, and be like, oh no, let's ignore that part. Let's not say the life insurance part. Let's focus on the wealth building or the cash value or all the sexy sounding stuff. No, this is life insurance. You're going to pay a premium. You're going to have a death benefit. When you pass away, that death benefit's going to go to someone. And also, you can design it to where it does cash accumulation. You can add riders for things like long-term care, disability, major medical, all these different things. But that's all in addition to what the thing actually is and what the main purpose of it is, right? Do you have any thoughts you want to share on that, Nano?
So it goes back to the purpose, right? If I don't have my purpose very clear, right? Or if I have too small of a purpose, I am going to find reasons to do something that's going to be quite comfortable, or the thing that I have been marketed to my entire life. Going back to the skill that you mentioned it, right? Fear, responsibility. My level of responsibility has to be of such a degree that what I have been fed my entire life perhaps does not provide me this. Now, when I say this, I mean a tool that the wealthy have been using in order to accomplish this. So if my purpose, it is like just to be thinking about me, right? Or just like like not too big, meaning like I need to have, when barriers do come, I actually need to put it aside, right? And perhaps a barrier could be, I don't like to read. That could be a barrier. Imagine having a guideline of steps, and from time to time I hear like, man, I don't like to read. I'm like, I don't say this, but it's like, I might as well be like illiterate. I might as well not know how to read, because if I have access to a piece of information that is going to guide me from go to here to there, and my barrier, whatever that is, right? It is like perhaps not reading. Again, selfish. Who am I thinking about here? Me, right? I gotta have like some of the stuff that I do here, and I'm, probably Jerry too. It's like some of the stuff I don't like to do, right? It's like sometimes I am uncomfortable doing some of the things that I'm doing, but I do it. Why? Because I am trying to help a ton of people. Jerry put an email out together this week. Look, if we accomplish this, this means lots of families are going to be out of debt. Lots of families are going to be solvent. And I just kept thinking about, wow, that is true, which means my level of being uncomfortable throughout the process, or my level of being reasonable because I'm okay making X amount of money, I'm thinking about me. I need to put that aside. I need to have a higher purpose, right? And this is it, right? Okay, good. I got to accomplish the purpose. I've got to be playing the game. I got to know what game I'm playing. If the game it is financial freedom, okay, good. That is the game, which means I got to think about it. If I'm not going to make it, I got to make sure that people are taken care of. So I can go on and on, but I know we have a lot more to cover here.
Yeah. And guys, I want to add to that though, real quick. If the game isn't financial freedom, then the game is making the prison feel nice, right? Like what game are you playing? You got to look at, okay, well, am I actually financially free right now? Do I have unlimited economic movement? Am I unrestricted with finances? And if the answer is no to any degree, then I don't have financial freedom. And the thing is like Nano said, it's just reading and math followed by good behavior. So as long as I get the information, I understand the math behind it, I understand the words being used, and then I just put some discipline in, it's gonna happen. Right. And so I can either, you know, play that game, or I can play the game of making, you know, not freedom, which would be slavery or bondage, feel nice when it's not. Right. Making some sense of something that doesn't make sense. So these are the reasons why we would talk about life insurance. First is like, okay, well, you're not free yet. So if you don't make it out, what about your family? Okay, what about your business? What about your loved ones? And those are all things that we would plan ahead for. So what I'm going to do is just jump into our next slide here. I did too many slides. Purpose of life insurance, the myths. So I'm going to read some of these myths off. Okay, so these are all ones I've heard before. Life insurance is a scam. We've all heard that, probably thought about it before. I've heard this one. Why would I care what happens if I'm already dead? I instantly lose respect points for people when they say that. It's too expensive. It's a one-size-fits-all solution. Like there is the belief, you talk to some people that sell life insurance, they'll put it on everything, right? Like they'll use it for literally everything and they think it's a silver bullet. The other one is there are good and bad types of life insurance. And then there's, you know, the flip-flop belief of it's only for the wealthy, it's only for those that aren't wealthy. Those are kind of all the myths that are out there. And so before we dive into like what life insurance is and how it works, we need to handle some of the myths. If we have fixed ideas where we believe something, like let's say life insurance is a scam, well, where did I get that from? And did I inspect whether or not that's true? Does that actually play out in life and cause me to win by believing that? Who did I get it from and where did they get it from? Right now, if I'm not asking those types of questions, you know, I'm going to believe some of this stuff. And like Nano said, to my detriment, it can hold me back. Right. Growing up, I was always the kid where when someone would tell me something, I would want to know where they got it from. And I would want to know where they got it from, where they got it from. And at the end of the day, it's like, okay, good. Someone made that up. With most of the things we hear, someone just made it up. They came to some random conclusion and it passed down from person to person to person. And now everyone thinks it's real. Nobody's ever like turned the rock over to look what's underneath of it. Right. So Nano, let's hit some of the facts on this. You know, the first myth was life insurance is a scam.
So, I mean, okay, good. So when we take a look at that word, right? And if you read the book, you might understand why that might be an idea going around, right? If you just take a look at who has a vast interest on you and I not having access to a tool that is going to be helping us achieve financial freedom, right? So, and I want to look it up, the word, right? Scam, right? It is going to be a dishonest scheme, fraud. Now, what is a myth? A myth, it is going to be a widely held but false belief or idea. So if this is being thrown around like, hey, this is a scam, this is a scam, this is a scam, I'm like, okay, like, and how come, number one, who's using it, right? Let me take a look at the type of individuals that are using such a scam, right? One, banks.
The number one, by the way, not just one, like the number one,
right? Banks. To the wealthy. And the game goes back, what game do I want to play? Right? If this is the game, they're winning. And how do I know they're winning? By their statistics. Right? So like, is that a scam? Then how come those who are winning are using it? Pretty simple, right? Hey, let me go play that game. Meanwhile, you play this game right here, the middle class game. Is anything wrong? No, until it is. Until mom needs help and I cannot help. Right? Until I need to get out of that and like I'm just like drowning in that. Now because I have a fixed income and then like inflation is going out the roof because I don't understand some of the terminology, right? And then I start feeling an effect. I have a failure. I start making things wrong, right? So what is the scam, right? Have I been inspecting this? Now, conversely, when we take a look at, right, going back to what would be the opposite side, here we have some of the facts. One, life insurance, it is one of the most regulated industries. And if you care for people when you are alive, why does that change if you're dead? So I was thinking about this, right, as we're putting this content together for tonight's webinar. It was like even more of a pressing need. Like I heard Jerry's story whenever I was just a client about, you know, how, you know, he had to go through the situation with his mom and he was unable to help at that time, right? And I'm thinking to myself, wow, imagine me going through a similar situation, right? Like, let's say I do die, right? Which eventually I will. But then, like, I die, let's say, ideally, no, let me take the word out, right? Let's say I do die, before my parents, to the degree, right? I am want to make sure they are taken care of. And if I'm not, one, I am my most valuable asset, which means I'm able to produce income. If I'm not insured, my beneficiaries, my parents, which I do care, will not be taken care of financially, right? So if I care for a person while I'm alive, why is that going to change when I'm dead, right? For me, it's like, I got to make sure this is in place, because it's a problem if they're not, right? And again, I got to have more of a bigger reason than just my immediate things, right? Like, if I'm just thinking about me, selfish. I mean, and I hate to break it like that, but like, when I heard some of this concept first, like, you're just thinking about you, selfish. If you're poor, selfish. Why? I'm just thinking about me. I'm just thinking about, hey, I want to come home and relax and chill and whatever. Selfish. I'm like, man, that's harsh, but it's also true, because it's going to require a new level of activity, reason aside, meaning reasonableness. Oh, I'm too tired or whatever. I'm like, good, okay, fine. What about everybody else that needs help? I have access to an information that is going to allow me to do more good. And if I don't do, where's my level of responsibility on the skill that Jerry was talking about, right? Now, life insurance done right can be inexpensive or even free, which is a fact we're going to be covering here as far as some of the breakdowns. I don't know if you're going to be doing this now or later on, Jerry.
We'll do it in a bit. Yeah.
Go ahead.
We'll do it in a little bit.
Okay, good. So life insurance done right can be inexpensive or even free, which is, again, once we do the breakdown, some of the numbers, you're going to see this very shortly. And there's no one size fits all solution. This is where, like, somebody like myself, like Griffin, like an expert here, right? On this is going to be, hey, let's take a look at your situation. Number one, let's find out your goals. Let's find out what is it that you're trying to do to determine if we can actually help. Now, the belief here is that we can help, but we can help who? The willing, the able. If you are in a position that where you're willing and you're able, right, that you actually to want to make improvements, you want to follow the system, and you want to grow, we are going to help. That's the bottom line, right? Now we're going to tailor-made according to your situation, come up with ideas, creativity. The more creative that I am, the more committed I can be towards finding a solution. If I don't have the commitment, guess what? Creativity is not going to come along. Now, it doesn't have to be like any coming up with like new fancy ideas. Simply means if I need to make more money, then I go make more money. Bottom line, right? That's what it really comes down to. So I can actually start saving more to be able to invest and so on and so forth to follow the triangle of wealth. Also, life insurance, it is inanimate and amoral, which means doesn't have any life to it, right? It's not right or wrong. I got to understand what each one it is going to be providing for me to see what's going to be the most fitting according to my situation and my goals. And it is used by both the wealthy and not the wealthy.
And on this point, real quick, guys, the one size fits all solution. I was talking to Lexi, this was maybe 2 months ago, and in our part of the industry, there's a lot of, we call it the sacred account, but using whole life insurance as a banking concept. And I have a lot of, connections and friends in the industry that's the only thing that they do, right? Like that's their main thing. And so, we're talking and I was like, I could never, like, if somebody had $2 million, I could never tell them to put the whole thing in life insurance. Like I wouldn't feel right doing it because I wouldn't do it. Right? Like there's a specific thing you're trying to accomplish with the sacred account, with the infinite banking concept. And so I would never tell someone put all your money in it because that's not what you should be doing. Banks don't do that. They keep about 20% of their tier one capital, their most prized reserves. 20% of that goes in life insurance. Right? So this is the one size fits all solution. I could never tell somebody this will solve all your financial problems, put every dime you have in it. No, this does a specific thing. We're going to use it for that specific job. And then we're going to use the rest of the tools for the jobs they're used for. It's like building a house and being like, yeah, all you need is 2x4s and a hammer. Like you might use them a lot. Like those might be some of the primary things you use, but there's a lot of other stuff you're going to need too. And so, like for me personally, I own a lot of life insurance, but guys, I own more gold than I own life insurance, right? I do more secured private lending with real estate than I have life insurance. Right. And so you hear me talk about the sacred account and it's something that I love and I use, but it's not the one size fits all solution. right? So I want to make sure we wrap our minds around this, because I want to validate. A lot of people hear this and they're like, yeah, I don't believe that, it does everything that it said it does, right? And that's because a lot of people say it does a lot of different things, and that is true. Like, it does what it's intended to do and nothing more, and it shouldn't do anything less than that either. So those are the facts. I want to quickly hit like the different types of life insurance. This was actually, my marketing team looked at this on Google, and this was one of the top search questions, is like, what are the different types of life insurance, right? And so these are all basically all the types, right? And I basically went just from grouping of different types down to the very bottom. And I kind of want to cover some of these with you guys, right? So the first group is called term insurance. You'll see term on all of these. Okay, term means it's temporary. Okay, term means that it's going to cover you for, let's say, 20 years. And after that 20 years, you're done, right? Or for example, it might cover you for life, but every year you're going to reduce your death benefit till eventually your death benefit's gone. That's called decreasing term, right? So you start up here, and then every year your death benefit gets lower and lower and lower, because as you get older, your premiums go up, and it's a way to conserve costs. And it's the idea that you don't need as much death benefit as you grow in age. Okay. We also have increasing term insurance, which is the opposite. Every time you have a birthday, your premium gets more expensive, right? So that's a type of term insurance, increasing or annually renewable. These are all temporary. There's also level term insurance, which is you're going to get covered, from one point in time to the other. Let's say maybe for 20 years, right? 20 years, and then your coverage is done. Okay. So those are all types of insurances that are temporary. They're called term. Okay, now the other one that I want to go over is called final expense insurance, right? Final expense insurance is, something that typically is sold to seniors. It's going to cover not that much money, maybe 20, 25,000, 50,000, 100,000 if they're lucky. It's mostly for burial costs, right? We're not doing anyone any huge favors with this. This is someone that's 80 years old. They didn't plan ahead. They don't want to be a burden to their family. And so they want to make sure their casket's paid for when they die. Nothing wrong with that, but that's not going to make you wealthy, right? Now we start getting into some more complex stuff. We have what's called universal life insurance. Okay, universal life insurance is annually renewable term insurance, meaning the premium goes up every year, and it's combined with cash value, right? So you have a cash account that you put money into. So if you put in like $100 per month, you're going to have part of it go to this premium. It's going to be really, really cheap. The rest of it's going to your cash value. And then every year, that premium cost is going to climb, and eventually it's very expensive. It starts pulling from your cash value, right? So that's universal life insurance. There's also variable universal life insurance, which just means it's in mutual funds, right? And then we have what's called index universal life insurance, which means it's essentially in like an annuity product. You're getting part of the market participation, whether that be stocks or bonds or gold or whatever have you. And there's going to be a cap on what you have, but you also can't lose money. That's called index universal life insurance. And then there's also whole life insurance, which is level coverage for your entire life, right? And so these are all the different kinds. Again, none of them are good or bad. They're all just different. They are what they are, right? Like somebody that tries to drink coffee from, a spoon is probably going to be like, oh, spoons are bad because they're drinking from the wrong thing. You're supposed to use a mug, right? Somebody that tries to ride on the freeway on a bicycle is probably going to think that the freeway is bad because they're misusing the freeway. Right. So none of these things are bad. They're amoral. Like life insurance doesn't have morals and emotions and things. It's just a thing. It's an idea. Right. Now, I'm a big fan of whole life insurance, and I'm going to share with you why tonight. But all these things do different things, and each one of them has their own sales pitch. Each one of them has their own reason why you would do it or why you wouldn't do it. And so what I want to encourage you on tonight is definitely learn about these. Right. Even if you don't know them yet, even if you don't have them, you're not planning to, like, it's part of being financially literate. I'll tell you guys what, I only own one of these. I only own whole life, but I know about every single one of these. Okay. And again, it comes down to like my level of responsibility. Like Nano said, like if my unwillingness to read is the thing that separates me from financial independence, it means that financial independence doesn't matter that much. Like imagine if you got bit by a rattlesnake. You get bit by a rattlesnake and you have like the map in your pocket to go get the antidote, and your excuse is, I don't like reading. Right? Like you're going to sit there and die from a rattlesnake bite because you don't like to read. No. You're going to read even though you don't like it, because the solution, the problem you're trying to solve is important enough for you to like buck up and do something that makes you uncomfortable. Right? So this, looking at this, you might be like, oh, that's a lot of words. That's a lot of meanings. All of these are definable. Every single one of these, you could go on Google right now and learn what they are. Whether or not I do that is attached to my financial responsibility level and my desire to understand and to be in control of my money. Nano, you look like you had something to say there.
Yeah, well, it's this thing about, oh, I'm not going to read or I'm not going to do this may show up in a couple different ways, right? Hey, I rather start planning my, I want to plan the weekend because maybe I'm doing a job that I don't like, right? Or I'm always planning the next trip. Ain't nothing wrong with a good vacation, right? Here we have the team. Every time we accomplish a target, we set a goal to actually go have some fun, right? But if I'm actually on my downtime, after I'm done with my activity of earning my livelihood, I'm finding ways to get distracted, right? To not improve. There's almost like a bigger layer, quote unquote, problem or things that need to be addressed, because why am I not going for it? It's not normal, right? You take a look at any living being, right? Like, it is normal, like, hey, they're going to grow and expand. Human beings, like, it's almost like they put a cap on how much you're going to grow and expand. The question is like, why am I going to be doing that, right? So it's just like the thing that I kind of wanted to mention this, right? The fact that I may not read a book, it's like, that's going to help me. It is almost like an underlying factor of something that's going to be way bigger that needs to be addressed. I address this, now it starts to showing up on my activity, right? And perhaps you just have come across this the first time, right? Not a problem. But if you have been going through this for a couple, of weeks or months, like, let's take some action, right? Let me start putting into application this kind of the information that I have learned that it is true, right? Got to make sure that it is true. But if it is, and how do I know? I take a look at who is winning. If they're using that, why would I not?
Exactly. So, which is the right type? I want to talk about this. Like, if I'm learning about this and I'm like, okay, well, what do I use? Which one is the right one for me, right? So, all of these do different things. Decreasing term insurance, right? Like, that means that over time, I want my costs to go down. So my policy is going to shrink every year, right? And so what would the purpose of that be? That would be for somebody that maybe has a lot of risk up front. They have debt, they have kids, they have all these different things. And over time, they're very certain that they're going to reduce that. And so they're looking at, okay, well, I'm going to cover myself, on a step ladder basis where it goes down over time, right? Increasing. This is, honestly, I don't think this one's great. This one starts out really, really cheap, and then it gets really, really expensive really, really fast. Imagine every time you have a birthday, your cost of insurance goes up, right? So you sign up and it's like $15 a month, and you're like, that's great. Well, next year it's 18, and the year after that it's 25. The year after that, and it climbs and climbs. On increasing annual term insurance, I've seen people in their 60s paying thousands of dollars per month for a measly term insurance policy that they didn't realize it goes up in premium every year. Again, not good or bad. It just is. That's what happens, right? Like, you could look at the rattlesnake thing. You'd be like, rattlesnakes are bad. No, rattlesnakes are just snakes. They're doing their job. They bite things when they get scared. So don't scare the snake. Don't go where the snake is, right? If I'm looking at, the term insurance thing, like, if I'm this person where I've got a $2,000 a month premium, why didn't I know better? Right? Why wasn't I looking at my bank account and noticing, weird, every year this thing gets more expensive. I should call someone and ask about it. Right? If I'm the agent selling it, like, why am I not educating my customer more, right? That means the agent has a degree of financial illiteracy, right? Like, we spend so much of our financial lives relying on professionals. Who deemed them to be professionals? Like, a professional is not like something you get from taking a certification. A professional is a status. It's a condition of an individual's skill set. This is something you earn in battle. Like, you become a professional by doing over and over and over to where you're so good. Usually a professional isn't somebody that has to go get validation for it. They're not going to go take a test to be able to hang something on their wall that says, I am a professional. They're just a professional, right? Level term insurance. This is the one I used to do all the time. Level term insurance is great for somebody that wants to have coverage for a period of time, no longer than that, right? They want to be covered for 20 years, and in 20 years, they plan on having no debt. They plan on having a bunch of assets, and they're just looking to get the cheapest thing they can without any risk. There's also return of premium term insurance. This one, honestly, is kind of a gimmick in my opinion, right? They're going to overcharge you so they can give you your money back at the end. So not something I'm big on. Final expense we kind of covered. This is for someone that's older. They didn't do any planning ahead. And so now they're like, okay, well, I don't want to leave my children the $20,000 funeral bill. Universal life insurance. This one is not my favorite. Okay, this is typically sold as like a retirement plan, right? Whether it's variable, indexed, or just straight up universal. It's the idea of, okay, well, you're going to overfund this, you're going to put a lot of money into it, and then you're going to retire on it one day. Well, what they don't tell you is that these things are all back tested on periods where they didn't actually exist. Meaning they're going to take a policy today and they're going to say, well, 50 years ago, you would have done X, Y, and Z, but the policy didn't exist 50 years ago. The policy existed only 5 years ago. So how are we going to take something that only existed in the last 5 years and try and tell people what it would have done in the last 50 when it wasn't even a concept yet? Right? The one that did exist was universal life insurance in the 1980s. And the universal life insurance was such a shit show that they actually like got shut down. People were suing agents because it's an increasing internal cost, right? You have an increasing internal cost. It's like a business. If my cost is always going to go up and I've got no control over my income, at some point they're going to crisscross. It's inevitable that that's going to happen, right? So this is sold as like a retirement plan, variable. I think variable is probably the worst one because there's mutual funds in it as well. So you've also got Wall Street involved. And then you've got index universal life insurance, which is the one everyone and their cousin sells today. If they've got a life license, they probably work for any number of 4 or 5 agencies that all they're going to talk to you about is index universal life insurance. And it is to them like a silver bullet, right? I have to know these things. Then there's whole life insurance, right? There's a bunch of different types of it. There's one special way to design it. It's called high early cash value. This is how the banks do it, right? So you look collectively at the largest banks in the United States, they keep, I said, 20% of their tier 1 capital in life insurance. Bank of America alone, I have a picture of their financial statement, $22 billion in whole life insurance cash value. Just for one bank, Bank of America. That's not even counting JP Morgan, Wells Fargo, PNC, all these other banks. So when I look at the list, like Nano was saying, who's winning and what are they doing? Okay, in Q4 of 2020, JP Morgan Chase Bank had their most profitable quarter in history. While everyone else was getting slaughtered by COVID, they had their best quarter ever. Right? They're winning. Regardless of what we think, they're winning. Their stats are up. So I look at, well, what are they doing? They're putting 20% of their reserves in life insurance. We give our money to them and then they go put it in life insurance. Right? Do they put all of it in life insurance? No, but they put 20% of their tier 1 reserves, their most prized reserves go into that. Go ahead, Nano.
Yeah, so I actually want to hit on this exact point that you're mentioning right now, because you take a look at the scale of what you mentioned, responsibility and fear, right? Q4 2020, what was the consensus that we had as a society, right? Almost like everywhere, when you take a look at it, got to put your mask on, and there's a lot of uncertainty. What almost the less certain that I am, right? I'm going to drop what? Okay, I'm uncertain. I can go into a confusion of not know what to do, which can lead to fear. Now, we look at, again, very objectively, the most profitable quarter in history in a time where everybody else is operating in fear, right? If I'm like operating in fear, it's almost like, excuse me, with English, like I'm a dumbass because I can't think rationally about what needs to be done. Because if I just look at it objectively, they ain't operating in fear. They're like most profitable quarter in history. And what are they doing? Life insurance. And I'm going to be finding out with real, because this is, I'm like, I just look at that, right? Again, the skill responsibility. It goes back to what, like, if I'm uncertain, let me be certain. Let me get that information. I can increase my certainty. Anytime that I am uncertain, I need information to actually know what to do. And if this has been compiling for the past couple of years, it may require some undoing. But just from a very objective viewpoint, that's what they're doing. Like, I don't need to like Q&A a lot, have a lot of questioning behind, right? Like they're winning. This thing that I'm doing is not giving me that result. So I just do what they're doing. That's like the bottom line. I wanted to kind of go over this skill and mention it to you again with the responsibility and fear.
Yeah, totally. And I want to open this up for a couple questions, but really quick, guys, I want to just point out like the JP Morgan Chase thing. Their CEO, Jamie Dimon, guarantee that this guy knows about every single one of these. Does he need to? Probably not, but he knows. right? Like it's kind of like when you're into winning with something, you learn everything about it. You don't just pick the stuff you don't like and what you do like for me, with business, there's stuff that, I didn't know right away. I didn't like it because I didn't know it. Usually those two things go hand in hand. When I'm not good at something, I don't like it. And so I have to realize when I'm not good at it, I don't like it. When I don't like it, that's an indicator that I'm not good. Okay, that means I'm not good. And if I don't like something, then I have to be able to, like Nano said, look at the thing of, okay, what are my results? And if my results aren't where the top people's results are, factually, I'm not right. Like that's how I think. If I look at my stats and they're not where they should be and other people's are, I don't have the right viewpoints. It doesn't matter where I got them from, how attached I am to them, how it bothers me that I don't have them or I'm gonna have to change them. I can't be right if my stats are down. If I'm correct, my stats would look different. Right. And whether or not you take up that mindset, that's totally up to you. I'm not saying that's how you need to think, but I'm saying that's how I think. That's how Nano thinks. That's how the top 1% think. We look at what does the stat need to be? And literally for me, what do I need to believe for it to go up? I don't care what it is. I was telling someone the other day, you can literally think for me. I don't care. Like as long as my stats go up, I'm good with it. Right. Because I know what the result is that I'm trying to get. And so that's what I'm chasing is that stat. So I want to answer a couple questions. First one I see here is from Avery. I haven't spoken to Avery in like 20 minutes. We were texting about Warren Buffett a little while ago. Let's bring Avery on real quick and answer his question. What's up, Avery? How are you tonight?
Hey, what's up, Jerry? What's up, Neno?
What's going on, man?
Hey, good to talk to you. What's your question?
Yeah, I was curious to know, outside of Google, obviously, and Investopedia, if you had any cool CFP textbooks you'd recommend to learn about the different types of insurance.
Yeah, I mean, so you kind of hit it on the head. If you're trying to do a quick study, then I would say like Investopedia is probably the best place you can go to. If you really want to get in depth on the different types, I would actually say go take your state life insurance exam. You can go on like Kaplan Financial Education or Success CE. There's Exam FX. There's a couple of them out there. And you can literally just go learn about all the different types of life insurance. That's probably going to give you the most textbook, thorough overlook. And you should do that anyways as an ambassador with us, because then you can actually be licensed and stuff too. Griffin can maybe get you some data on that, but that'll give you like the most technical training on it. It's not going to be totally applicable. Like when I took those tests, it made me very knowledgeable in like the rules, the laws, how it all works. The strategy is more like you kind of work with it and figure out how to do things with the policy once you've got that basic understanding. Good question there from Avery. Let's see what else we have here. Editha says, can I help get licensed? Sure, Editha, Griffin can reach out to you on that. Good, so I think that's all the questions I see. So let's jump back into this then. So guys, again, like what type is right? It depends on what you're using it for. Right. And we'll talk about what the wealthy use it for and what we want to mimic with this. Okay. So what are the needs here? Right. So initially, like the first need someone would have with life insurance is they don't have wealth yet. Right. Like one of the best explanations that I heard of like life insurance, especially like term or temporary, is an individual is renting wealth because they don't have it yet. They're going to pay to be able to have the insurance company's wealth because they've not built up any wealth of their own. So this is again, that point of securing the win, right? Like no matter what, I'm going to make sure I secure the win. And so I don't have the wealth yet. Okay, good. Well, how do I make sure that my family has it anyways? If I was dirt poor and I was like set on creating generational wealth, the number way I would do that is through a life insurance policy. Right? Like if I wasn't going to actually try and build wealth in my own lifetime and I just wanted to make sure my kids and grandkids and my spouse were okay, it would be through a life insurance policy. That's the most surefire way to do it. Right? Now, the second point, Nano, maybe you can hit this, is once someone is like got the coverage, now they're building reserves.
Yeah, for sure. So again, it kind of goes back to what kind of insurance I'm going to be using, right? Different types. Jerry listed a whole bunch here. And the one we're going to be thinking with it is whole life. More specifically, is the one that needs to be designed in such a way that to allow this to happen. That I'll give you the technical term, and I'll give you the term that we use it just for a little simpler, right? The technical term is called high early cash value dividend paying whole life insurance policy, right? So that is a technical term. Well, we call the sacred account. Okay, so it needs to have we need to have access to the cash early, right? It needs to I need to be earning dividends on this, and I'm going to be using this to be building up my cash reserves, right? And by doing so, I can actually use it to go to the following point here: pay off debt. Okay, I'm going to ideal scenario. Let's say if I have some debt, I'm going to do what? Line up all my debts, smallest to largest, make minimum payments only. Any additional money I'm going to be put inside my sacred account, which kind of goes back to one of the things that I mentioned at the beginning of the call is also what this is not necessarily a one size fits all. We can actually get on a call with myself or Griffin, right, to help design what can I do here according to my situation to actually make room for something like this, right? Good. So I'm going to be using this to build up reserves, pay off some debt. Also, I can use this to be self-financing large purchases. Again, on the grading scale, in order for me to achieve financial freedom, I'm going to be gaining ground every step of the way. Instead of using a bank to perhaps finance a car, or perhaps using to going to a store to finance a couch or TV or bedroom set, I'm the bank, quote unquote, I'm the bank in the process. I am going to be financing this thing and pay myself, meanwhile earn interest. Did you have something to say there, Jerry?
Yeah, so I was gonna say, just if you look at this flow, guys, like, aren't you gonna do this stuff anyways? Like, let's say you just bought term insurance, like you took care of step number one. Well, why would you need insurance? Because you don't have money. So wouldn't the next logical step be to build up reserves? Like, you do that anyways. And so it's like, okay, well, where would I do that? Would I do that in the bank? They're only paying me 0.01% is what they're paying now. 0.01% on my money. They're literally trading it and loaning it out like a hedge fund. And then they're insuring it with my own taxpayer dollars. Right? Like, why in the hell would I put my money there? Am I going to give it to Wall Street? Like they don't even pretend not to be criminals anymore. Right? Like every single movie you see about Wall Street, it's criminality. Like, it's just known. Right? So I'm looking at, okay, well, where could I put it? I want to put it somewhere that's safe. I want to put it somewhere that I know is going to grow. When you're dealing with large financial institutions, guys, this is a trick that I learned early on. If you partner with them, anything they do to you, they do to themselves. Okay, I'm going to repeat that. If you partner with them, anything they do to you, they end up doing to themselves. So when we do like a whole life insurance policy with this design, it's through what's called a mutual insurance company. Mutual means that they treat their policyholders like partners. I'm literally a shareholder in the insurance company. So if they screw me over, they're doing it to themselves too. Right? It automatically aligns our interests. Like, people are all about today best interest. Okay, well, the best interest you can have is what happens to you happens to me. Right? If that's the rule, I'm going to take care of you because I want to take care of me. That's how life works. Right? So I'm looking at, okay, well, I'm going to be building reserves anyways. I'm going to be paying off debt anyways. I'm going to be, most people aren't going to be self-financing large purchases. What are most people going to do? They're going to go to the bank, they're going to get a loan, and then they're going to pay interest and income to the bank forever. Right? Like, think about it. If you owned a gas station and you had a competitor gas station across the street, are you going to go buy gas from them, or you're going to use your own station? Okay, you could do the same thing with a bank. If you had your own banking system, why would you go give interest to another bank? You don't profit from that, right? If you give interest to your own bank, you directly profit from it. So then you start thinking with, okay, well, I want to self-finance my car, which is what I do, right? I want to self-finance my couch. Literally, the couch behind me right there, I bought that with my life insurance policy. Okay, nothing to brag about, but I'm just saying, like, that's the kind of stuff you can do, right? That's freaking cool. I financed my own couch.
That you were going to do it
awesome.
anyways.
Was that?
That you were going to do it anyways elsewhere.
I was going to get the couch anyways. Yeah. So what Nano is showing you on this, it's like stuff that you're going to want to do anyways. You're going to want to invest for passive income anyways. You're going to want to do estate planning anyways. So if we can show you a tool that helps you do all those things, why not use it? Right? And the only reason that someone wouldn't use it goes back to the book. They don't know. Okay. And either they don't know because they haven't been shown yet, or they're not willing to know. So if you're watching this and you're willing to know, you're now being shown. You're aware of this now. This is a thing. It exists. Right? If you want to take action and responsibility and learn more about it, get the book. Okay. Reach out to Griffin in the chat. Say, hey, Griffin, I want to get the book right now. How do I get set up with it? Right? End of rant. Go ahead, Nano.
No, no, it's just like, I mean, you hit the nail on the head, right? it's almost like a sequence of steps that I'm going to be gradually, almost like gaining this, my freedom step by step, inch by inch, right? I build my reserves, I pay off the debt, I free up cash flow. Now I have a little bit of extra cushion, the things that I'm going to need to do it anyways. I start self-financing, start bypassing the bank, right? The less, like, again, when we think about money, that is a communication line. Whenever I'm putting that communication line to a bank and I start understanding the history of, 1913, Federal Reserve Bank, all of that going on, right? To the degree that I am having my communication line with them, it is to a degree that I am allowing that suppression to be around me. So imagine removing all that entirely from the picture, where I am the bank in the process for the things that I was going to be doing anyways. And then once this is in place, right? Good. Now let me go ahead and start investing for some passive income. And now let me also do some estate planning along the process here, which all a sequence of events is going to lead to the end game, right? Not only winning, but like being able to pass this on later on to my beneficiary. So
awesome. Now we have a quick success story that just came in on Facebook. This is from our client, Justin Goff. Justin says, I am thankful for a sacred account. I've been able to pay off my debt and invest in 3 separate deals using it. So that's a real life person in the comments on Facebook that is a client. He's used this successfully. So here's the whole idea behind this, guys. This is like with insurance. I learned this early in my career, the theory of decreasing risk. In the beginning, I have lots of risks, right? But I have very little assets. And so that's why I would have insurance, because again, I don't have the assets to offset my risk, right? Now, over time, I should be reducing my risks. I should be paying off debt. I should be saving money. I should be investing. I should be following the triangle of wealth. My risks should be going down, right? And my assets should be going up. Okay. Now, the problem here is most people don't do this. The average American, they don't pay off their debt. The average American, they don't cover themselves. The average American, they don't build up assets. Right? What do? They try and spend as little as they possibly can on insurances and financial things. They try and spend as much as they possibly can on just like consumerism. They save no money, and the money that they do save, they give the banks in Wall Street or the IRS. Like literally, like for most people, their tax refund is their greatest source of savings for the year. Like you literally overpaid the IRS in taxes. They held it for an entire year and paid you 0 interest and then gave it back to you at the end of the year. And that's the only savings most people have. Think about how crazy that is. Like these are the 3 worst people you could give your money to: banks, Wall Street, and IRS. And that's where most people save, right? So in order to cross the bridge here, I have to be building assets and reducing risks. Okay. And we go back to that prior page of, okay, well, I get the insurance in place. I pay off my debt with it. Now the risk is going down. I start building reserves. The risk is going down and the assets are now going up. I start financing vehicles. Now I own the car and also my cash value still grows. My assets are going up even more and I'm getting rid of more risk by not having that car debt, right? I started investing for passive income like Justin did. Now my assets are growing even more and my risks haven't increased. And so it's the most natural way to actually go through this function of decreasing the risk, increasing the assets. And actually, we have some good questions. Let's answer some questions again real quick, Nano.
all right.
Okay, so we have a couple of questions that came in. We have a question from Michael. Let me bring Michael on live here. All right, let's see if we can unmute Michael here. Michael may not have a microphone. Okay, so I'll read Michael's question. So Michael says there are 2 whole life sales scripts. Get as much as you can afford. So that's number 1. And then the other one is, and get the minimum to make it self-sustaining, self-funding. In general, which do you promote? So we don't really have a sales script with it. We just design it the way the banks do. So you want maximum cash value, minimum premium, and minimum commission, right? You want to minimize the policy costs. You want to maximize the amount you have in cash, maximize the growth. And that should result in a very high cash value. And it should, it should break even very quickly. You should have more cash value than contribution very fast. You should be able to borrow against it right away. So a properly designed policy, if I were to put in $1,000, like tomorrow I should be able to borrow $700 to $900 out of that policy and it should still grow, right? And I should see that there's over the life of it, you know, a compounding annual growth rate of at least 3 to 5% tax-free. All right, we have a question from Keith. Let me see if we can bring Keith on. And Nano, maybe you can take this one from Keith.
Okay, good.
Hey,
Hello.
Keith, how are you tonight?
Excellent. How are you guys? Nice job.
Very good, Keith. So I see
Can you
your
hear me?
question.
Okay.
Yes, we can hear
We
you.
can.
So your question is, where is it? Let me find the question.
Keith, what is your question?
How long do you pay into the life insurance sacred account? And then so Michael kind of answered it, like 7 to 10 years, and then you start buying gold. Is that what you're going after? Because I've been told life insurance, some you go 15, 20 years. So I'm just kind of trying to wrap my head around this thing.
Totally. Nano, do you want to answer that?
Of course. So it can be, Keith, 7 to 10 years. It can be up to 15, can be up to 20, can be 25, can be like we can design according to what a person is trying to accomplish, right? And consequently, with the same time, we can actually going to be adding gold as part of the strategy as well. So it's going to be, as a matter of fact, gold would be from the get-go as well, right? In a smaller flow, but you would also start from the beginning, because again, we're trying to mimic what banks are doing. So we're actually going to be, ideal scenario is that we're saving in 3 major places, right? We start with precious metals and life insurance. And then, so 7 to 10 years funding minimum, could be longer if you wanted to. It depends on kind of like where you are, how much you want to be contributing. For myself, you know, I'm thinking up until I'm 70 years old, right? So for the next 35 years.
It's kind of like, why stop if it's a good thing?
Exactly. And one of the questions that I ask clients, right, from time to time is, how long do I plan on working? How long do I plan on using a bank? It's like, okay. And that should kind of gauge of how long I should be funding the account. If I'm going to be working until I'm 60, 65, 70, why would I not use this tool? That's my approach. Some people are like, hey, I want to be done within 10 years. Oh, good, right? I'm going for the long haul.
Okay. So then you could do it shorter, invest in more gold, and borrow out against your life insurance then, or you just do both and just invest less into life insurance. Say you're doing 1,000, you got your goal of 10 years, and then now go down to 500 and use the other 500 or better to invest in everything else then, or is that kind of the thought process? Get the sacred account as high as possible?
Not necessarily. Like, so let's say we pick an amount that you're going to be doing towards the sacred account. Let's say if you fund that for 10 years, after the 10 years, you're no longer going to be funding anymore towards the account. The account will continue to grow. And then we want to be thinking with an amount that you're going to be doing towards gold throughout this process from day one, right? As Jerry mentioned it, right? Himself, like he has a few life insurance policies, but at the same time, he has more money in gold nowadays than in life insurance. So it doesn't have to be, I have to diminish my contribution period, my contribution amount towards my life insurance. You see, for how long I got to determine how long am I going to be contributing on this, and how much do I want to allocate towards life insurance, and how much do I want to allocate towards gold.
Okay, I think I'm getting it.
Okay, good.
Yeah, and Keith, a good way to think with it, Keith, is you know, with life insurance, generally speaking, you know, an insurance company, they're going to let you put, you know, anywhere from 15 to 25% of your taxable income, like maximum, on an annual basis into your policy. So it kind of depends on like, okay, well, if that's my upper threshold, am I maxing that out? And if I'm not, then I've still got room and I can still grow and put more into it. If I am maxing it out, let's say that I'm putting in 25% of my income, but I save 40. Well, now I've got leftovers. And then it's like, okay, well, then I would put the leftovers toward gold or something else instead. So it is very customizable, but I like to think of it as like a pie. Like, what's my total savings rate? And am I going to put, you know, all of that towards life insurance? Or do I want to split that up between life insurance and gold? Both of them can be income producing. Most people don't know you can lease out gold and get income off of it. Both of them can be borrowed against. There are some differences, but there are some similarities too. So that's kind of the strategies when we work with clients. It's okay, how are you going to be using this, and what does that look like for your situation?
Okay, so it's more individualized and customizable to our certain needs.
Yeah, exactly.
Okay. Okay, the good book. I'm trying to wrap my head on it because I've been taught I've talked to Neno already this week. 40 years of taught. Okay, save everything you can, and then you can invest it, and then you can buy whatever you want. Now you guys are flipping that whole script, so it's trying to wrap my head around what my dad told me and how bad it was advice, but yet now it's switched that. So I'm working on that book, and I'm all the way to the back end now, and figuring out the last part of I see that's the process. So I got to read it one more time, and then I should understand it a little bit more. Good book.
Awesome. Awesome. Thank you so much, Keith. And it's okay to like Keith had mentioned, sometimes we get meaningful advice from well-intentioned people, and it's terrible, right? Like some of the worst financial advice I got from my parents. And it's okay to look at that and be like, okay, cool. Dad wasn't great with money, or mom wasn't great with money, and that's fine. And now I can learn and do better. It looks like we have a question from Cynthia. Let me bring Cynthia on here. All right, Cynthia, we're going to see if we can unmute you here. We should be live here. How are you tonight, Cynthia?
We're good. I'm here with my husband, Vince.
Hey guys.
Hey, good to talk to you guys. What's your question?
So we're not spring chickens, and I have a certain health issues, not obviously falling over dead tomorrow, but the older you get, the more that you deal with these things. The question is, the older we get, the more life insurance costs, especially if you have certain health issues. How do we know the return or payback if we the increased cost of life insurance as we get older versus the potential opportunity to earn off of it in this plan?
Very good question. So basically, and you guys hit it on the head. The things that impact life insurance performance are going to be the medical underwriting that you get approved for, or the way that they rate somebody. And that's usually going to be based on age and pre-existing medical conditions, right? So somebody that's older, somebody that has, some health stuff going on, they're going to have a higher insurance cost. And so that will drag down on policy performance a little bit. Now, this isn't as big of an impact, and it's not as drastic as like with term insurance. Like if you do, like for me, when I was, selling term for when I was like 18 years old, I could get, $250,000 term policy for $20 a month, right? Now, if I were to probably go get that same policy today, it might be closer to like $70 or $100 a month because I'm older. My mom died of cancer when I was 60. That's now on my medical record. So there's different factors that come in that really can inflate the cost. That doesn't happen as much on whole life insurance. And the reason being is we can really blend and mix the design to optimize performance. So, to answer your question, as you're going through the application process, we do something called field underwriting, which means when we talk to someone, we ask them questions during the process of them signing up that help us gauge kind of where they're going to fall on different underwriting guides that we get from the insurance companies. And so we know kind of what they'll get approved for maybe ahead of time. Now, the other factor then is during the actual design process, there's an illustration that's built based on where you'd get approved. And so we can actually see the internal rates of return, and we can show you, hey, here's the performance, here's what it's going to look like based on these factors. And if it looks bad, if it doesn't look like it's worth doing, then we usually will suggest, okay, let's find somebody else to put the insurance on that's related to you or works for you or something of that nature. You can still be the owner, and you can still be the one that controls it and borrows against it. But if you've got, a spouse that's younger and healthier, or you've got kids, or you've got, family, or you've got key employees, it actually is better sometimes to insure those people because their life is maybe cheaper for the insurance underwriters to look at and say, hey, we're going to give a better rating to that person. So again, very customizable. It's something we're going to look at in the process. But that's kind of the getting started point of working with us and talking and learning about those things. And Todd makes a good point. Todd S says, don't forget that you'll earn tax-free uninterrupted compounding interest, not to mention the control and access to the money you invest. Todd sounds like he knows what he's talking about. Yeah, exactly. So life insurance does grow tax-free, and it is uninterrupted compounding interest, which is kind of an oxymoron. If compounding interest is interrupted, it's not compounding interest. And that's the myth Wall Street doesn't tell you. Compounding means it never stops. So if you lost money 1 year, then it wasn't compounding interest anymore. So life insurance really is one of the only places you're going to see true compounding interest. Mark Perry says, I want to pay into my banking policy forever. That's awesome. Let's see. Doug says, what can a life insurance policy do that a paid off home cannot do? I could borrow against my home the same as I can borrow against the policy. Your home cannot produce dividends. Your home is not tax free. Your home has property taxes attached to it, insurance attached to it, utilities attached to it. Your home can burn down. Your home is not contractually guaranteed. So there's a lot of differences there, but you can definitely borrow against it. It is a strategy that we recommend for people. It's usually not the first one we start with, but it is something we recommend, once somebody's built up the equity to do so. Okay, good questions. I think we have one more. This is from John T. John says, if you already have a insurance policy, once you start this one, would you recommend canceling the other policy? Really good question. So let's say that I have a term insurance policy. I've got, let's say $1 million in term insurance. And I'm also now going to set up a sacred account, right? The insurance company is going to base my contribution limit on how much life insurance I'm eligible for. So they'll look at my income, they'll look at my insurability, they'll say, hey, like of the total pie, this makes sense that this person could have, let's say, $2 million in life insurance, right? Now, if I've already got $1 million, then they're going to give me less because they're not going to double insure me. They're going to say, we can justify that you have 2 million, but you already have $1 million. So we're only going to give you an extra $1 million on top of that because that fulfills your $2 million quota, right? Now, if I want a really big policy, it's detrimental to me to have that extra term policy. I would cancel it in that scenario, right? Now, if I don't need that much, then it's like, okay, I could keep the term insurance, right? If I'm going to do a smaller sacred account, I'm not putting as much death benefit. If it's cheap, I can keep it, right? I was talking with Griffin about this the other day where he's like, hey, I've got $2 million in term. It's super cheap. Do I keep it or cancel? And it's like, it's not going to make a difference either way. It's $100 a month. You probably blow that on coffee every month. So it doesn't matter whether that went to Starbucks or term insurance. It doesn't really impact your sacred account, right? Now, if it does impact your sacred account where it's like, hey, I want to max out everything I can put in and I can't get approval because I've got other insurance in place, then for sure cancel it or replace it because now you increase your contribution limit on that policy for an annual basis. Okay, good. Let's see here if we have any other questions. Todd has a question. Yeah, go ahead and post your question, Todd. Todd says he has a question for a friend that couldn't attend tonight. Yeah, Todd, go ahead and put your question in the chat or the Q&A here, and we'll be happy to answer that for your friends. Good. And as Todd is putting that together, I want to just cover the last part of our talk tonight. And we kind of covered some of this already, but I want to cover the action plan, right? I never like to leave people without a plan on what do we do next. So if you're watching this and you don't have a sacred account, the first step is get educated, right? So if you don't have my book yet, Blueprint to Financial Freedom, you can get that now. You go to the link in the comments. You can go to jerryfetta.com/B2F promo. You can get the ebook for $2.99, or you can get the hard copy free. You cover your shipping, which is like $10. We'll give you the book. You get a course, you get a supervisor, you get a free coaching call with Griffin or with Nano as well, right? So if you don't have this yet, definitely go out and get that. Go to the link again. That's jerryfetta.com/B2F promo. And that's a great way to get started and get educated. We also offer a free course on the Sacred Account on our YouTube channel. We've got blogs on it. We've got an online education platform. You can learn about it there too. The bottom line is, don't do things that don't make sense. So if it doesn't make sense yet, go learn, right? Now, the next step is determining your contributions. And Neno, you talk with people on this a lot. Like, what should people be thinking with when they're like, okay, I want to get started. How much do I put in?
Yeah, so what I like to take a look at, what am I currently doing, right? And then minimum, right? We got to be thinking with numbers around $250, $300. Quite frankly, the ideal scenario, I got to be thinking, the real number that I got to be thinking is 40% of putting aside a saving. Doesn't mean everything's going to be going toward the sacred account. Does not mean I start there either, but that's the number ideal that I'm thinking with. But so start off point would be $250, right? We can start with something like that. But ideal scenario, the faster, the more that I contribute, put it aside to pay off my debt, save and invest, the faster I can get to my goal, right? If I'm saving more money elsewhere, right, and I'm allowed to, and I can contribute more into this account, why would I not? Because again, it all depends on what kind of strategy and what is the pace that I want to go. I mention to clients all the time, we're going to be going at your pace. You want to move fast? I'm going to move with you, right? I'm not going to twist your arm and say, hey, you need to show up, you need to do this. Like, I'm going to present the data to you. I'm going to help you get educated, and we're going to make the most logical decision that's going to be applicable to your situation. Most of the time, people are already doing these activities and just putting the money elsewhere. We're just going to shift the place where you're putting money and put it on towards the sacred account.
Awesome. And then we get to the setup, right? So the setup is it's a lot, it's something that we walk people through at a step-by-step process. And that's going to look like, like Nano mentioned, determining your contributions. And then it usually starts with your application, right? An insurance policy is not an entitlement. I was talking to one of the top executives last week at Guardian, and he's like, hey, like, this is not something we give to everybody. This is not a everyone deserves one, everyone's going to get one. Like, we're very exclusive with who we're going to insure. We want only the best clients. And so he was telling us, when you're talking to your clients, tell them it's like a country club membership. Like we're going to look at your financials. We're going to look at your medical history. We're going to look at your background check. We're going to make sure that you're the right fit to be part of our group. Right. And so that's part of the setup. Now we walk you through all of that. What do you need to fill out on the application? What do you need to say? What information do you need to provide? What designs should we do? Right? What is the illustration? Making sure you're educated. We have a course, right? We make you go through a course. There's two of them, actually. There's a crash course. You go through that as you're going through the underwriting process. And then there's a full certification that we have you do on the back end after your policy is set up, right? One of the things that I hated when I learned about this was, I learned it, and I'm a pretty smart guy, right? But I was the agent setting it up as well. So I was learning as I went. And so I would hear one thing, it does X, Y, and Z, it does da, 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 da. I'd be like, that sounds awesome. And I'd set up the policy, and then I would find out that it was slightly different in actuality. Wasn't totally what I was told, right? No big deal. It wasn't bad, but it wasn't what I was expecting. And so we want to make sure that when you go into it, it is what you're expecting and you know exactly how to use it. Now, passing underwriting, right? Like, this is literally like they go through financials, medical, all this different stuff. And so that's the underwriting process. Then you go through funding the account. Once you're approved, you fund it. You usually will do, if you have a lump sum contribution going in, you'll put that in. If you're going monthly, you can do monthly as well. We work a lot with our carrier Guardian. The reason being is they allow you to do unscheduled contributions. Okay, there's not another carrier that does completely flexible unscheduled contributions the way Guardian does. You can drop in, as long as you're below your annual contribution limit, you can log in any day of the year and put money in your account just like you could with the bank, right? So that's very flexible. That's very user-friendly. And then once it's set up, start using it to build wealth. Like Nano had talked about, paying off debt. That's your first thing. That's your first thing, right? If it's building up your 6 months of reserves, that's what you're doing. If it's self-financing your purchases, that's what you're doing. And by the way, self-financing the purchases is one of the ones that people try and skip usually. Okay, we get so fixated on, I want to invest, I want to invest, I want to invest. Okay, well, if you go get a car payment that's going to cost you $700 a month, and instead you put that through your sacred account and self-finance it, you're now earning $700 a month by not having the car payment. That's guaranteed, right? Usually you can get in with a lower amount than you could with an investment. Like don't skip this stuff. Like I said, I self-financed my couch. Like what, $3,000, $4,000 couch, not a big deal, but I put it through my policy because I understand that I'm going to earn interest on those dollars forever. I self-financed my car. I self-finance my personal development. I self-finance everything I possibly can. I would rather do that than invest because that's the first step. And I know that that's going to pull through and it's going to be guaranteed. When I invest, that's later, that's definitely helping. But between, okay, I could put 70 grand and I'm going to buy a car anyways. Do I get a loan, pay cash, or do my sacred account? I'm going to do my sacred account, right? So I think we have a couple more questions here that popped up in the chat. John asks if you already have an insurance policy. Okay, we read that one already. Good. Let's see what else we have in the chat here. Okay, I think that covers our Zoom questions. Let me see if we have anything on Facebook. So Keith, this is from Justin Goff on Facebook. Keith, Justin says you are moving in the right direction. Keith, keep going. Awesome. Thank you for that encouragement, Justin. Good to see everyone on Facebook. Andrew, good to see you. Justin, good to see you. Alex, good to see you. Levi, Jean, Sean. Good to see everyone. Okay, I think that's all of our questions. So guys, again, if you've not spoken with Griffin, check your chat. Griffin probably sent you a message already, right? If you've not gotten the book, go to the link, go to jerryfetta.com/B2F promo. Okay, jerryfetta.com/B2F promo. You can get the book $2.99 for the ebook. You can get the physical copy if you'd like that instead. It's free, or the book is free. You pay $9.99 shipping. We do have Nano's course coming up Monday. Nano, what's your course all about this Monday?
Well, this Monday, so this is a new book. We're going to be talking about the the behavior, the mindset, like basically the things that kind of happen in Wall Street. What is their belief system? Which is, as I was preparing for this, like kind of nasty, right? It's almost like going to a restaurant and see what happens in the kitchen, and you're like, do I want to eat here? So anyway, so it's going to be more the subject we're going to be addressing for the next couple of weeks.
Awesome. And guys, Liar's Poker, that's the same guy that authored the book The Big Short, which is the movie that everyone saw. That it's what happened in 2008. So these are real recollections of Wall Street, like actual true stories. It's actually what it's like there. So whenever we talk about Wall Street, if you're like, oh no, they're not that bad, like go read these books. You'll see just how bad it actually is, right? Like Wolf of Wall Street was not a fantasized depiction. Like that kind of sort of is what actually happens, right? So that's going to be 4 p.m. Eastern time on Monday. Be sure to tune into that with Neno Aquino. Otherwise, that's all the questions that I see. We will be back again next Friday. Again, if you haven't gotten the book, Cynthia asked, what's the title of the book that Nano is going over? It's called Liar's Poker. Do you want to hold it up again, Nano?
Of course.
Liar's Poker. So you can grab that probably just on Amazon and have that ready for the book call. Otherwise, guys, have a fantastic weekend, and we will see you guys again next Friday night.
All right, see ya.